Hello, and thank you for joining us for today's Denton's In-House Counsel CLE webinar series, our fall sessions. Before we get started, I have a few housekeeping notes. For the benefit of all participants, attendee lines have been muted. Should you have any questions that you would like to submit during the event, you may submit them through the chat box at the bottom of your screen. If we cannot address your question today, during today's webinar, we will follow up after the program. Please note that today's webinar will be recorded and circulated to all registrants via email after the event. Should you have follow-up questions at that time, please reach out to any of the key contacts listed in the email communication. Note, Denton's can only issue CLE credit for attendance during the live broadcast of the webinar. The following is a very important message regarding CLE credit. The webinar window must remain open for the entirety of the program, and it must be the only window on the forefront of your screen. WebEx will detect if you minimize the program or use the computer outside the webinar software, and this will prevent you earning CLE credit. One other important note, if you have a New York, New Jersey, Pennsylvania, or Kansas license, please be sure to listen for the code word given during the program. When prompted, you will need to enter the code word into the Q&A section of the screen. If you don't have a license in these states, you can disregard this message. Now, I am pleased to welcome Ronald Levitt and Jay Maples, who will discuss the essentials of private aviation, followed by Tyler Coe and Brianna Young, who will discuss with Max Mowitz, Program Director at One Iowa, LGBTQ legal issues, what general counsels need to know. Ronald and Jay, over to you.
Thanks, Beth. This is Jay Maples. I'm here with Ronald Levitt, and we appreciate everybody who is in attendance. We're here today to talk about the essentials of private aviation, and it'll be a kind of a broad brush stroke of the essentials that you need to know. It's a complex area with a lot of deal points. My background is I've been practicing 21 years. I started out like a lot of corporate tax guys as a general M&A transactional guy, and ultimately did a first airplane transaction in my, I think, second year of practice. And so I've been doing them about 20 years, probably average 20 to 30 deals a year on airplanes. And it's probably about a 25 or 30% of my practice. The other part is general corporate M&A stuff and general corporate counseling. My partner, Ronald, we've worked together a long time. Ronald's also a corporate tax transactional attorney who has a particular expertise in tax controversy. Ron, you want to mention a little bit about that?
Sure. Thanks, Jay. Yeah, I'm a lot older than Jay. Been practicing about 38 years, and we're going to just to use the first pun of the day. We're probably going to fly about 10,000 feet on our presentation today because we have a limited amount of time. So my practice area started as a transactional lawyer for about the first half of my career. And then in the last 20 years or so, I developed a practice area that focuses on tax controversy and dealing with a lot of conservation easements. And so we've developed a practice in Birmingham that we have 10 of us that do tax controversy of all sorts. The lion's share of what we do is defending conservation easements, but we also represent a lot of our corporate clients when they get audited by the IRS. The IRS, when they address issues, in the last few years, what they've tried to do is focus on particular areas. And you would wonder, do they really care about airplanes? And anecdotally, and if you read in the tax press and just what we hear, the people who have airplanes are people that have money and have a lot of income. And so it's like the old joke about why do robbers rob banks? That's where the money is. And so that's why we expect closely held businesses, more and more of them, and we'll talk why that's the case. But from a tax and business planning point of view, and from a business point of view, it makes sense to use airplanes to get around more easily and to be more efficient. Doesn't always work that way, but because of that, and because they're high deduction issues, I think we're going to see the IRS to look at these when they're doing general audits. And so what we're going to try to talk to, in addition to talking about the nuts and bolts of what it means to have an airplane and the rules, all the crazy rules you have to operate under. It's a very finite set of rules. Is, where are the audit issues and how do you protect yourself or prepare yourself for those kinds of audits? And that's kind of what we do. We try lots of cases in tax court and handle a lot of audits. And so a lot of these kinds of issues kind of lend themselves to this kind of an area.
Yep, and on the front end, we try to, prevent them from getting to that stage by appropriately setting everything up and documenting everything, which we will talk about. So some of you on the call may already own a jet. Some of you may be considering owning a jet. Some of you may already be using, basically flying private. There are a variety of ways to use or own a jet, and on this slide, you're really seeing from kind of the lowest kind of quote cost up to the highest cost. And cost doesn't necessarily just mean dollars. It also means kind of what I'd say the headache. So if you've got what I'm gonna call a flight card, which is pre-purchasing a block of hours from say NetJets for a block of 50 hours, you pay them probably 50 hours, like 100 grand, 200 grand. Sometimes you can negotiate those blocks and you use those on an as needed basis. And you don't have to worry about the actual ownership of the jet. You don't have to worry about the pilots, the insurance, all the other stuff that goes with it. A similar concept is to just simply charter a jet, and that could be from a local operator that has a charter a license. We've got a couple here in Birmingham. Obviously, every major town has 2 or 3 flight operators or kind of operate private flights. There's also there's a couple of apps, but the primary one's called XO, and it's sort of like the Uber of private jets. You can get on XO, you can search a destination, and you can book you a flight, and you pay via credit card. Very easy. Yeah, you don't have to do much. Then you move into, okay, well, let's say we want to possibly dip our toe in the water and we go to NetJets or another competitor, which is a little smaller, is Volato, and you want to purchase a fractional ownership. And NetJet sells a 1/8 ownership, I think a 1/4, a 1/8, and a 1/16. 1/8 is probably the more popular. That's basically a 1/8 ownership in a plane. A 1/8 gets you 50 hours is the rough number. And as part of that, you don't really own, you don't get a specific plane, but you are buying in, it's a little cheaper, and you do get a potential return on that. Even if you don't use it, if the plane makes money, you can come out where you're not really paying a lot for the plane. You also get, and we'll talk about this later, you're able to get a depreciation deduction for that ownership because it is a actual ownership, as opposed to a charter. You would just get a deduction if you pay for a 2-hour flight. It costs 10 grand. If it's business purpose, we'll talk about the later, you would get a deduction for that. The next step up would be joint ownership, and by joint ownership, that is where you've got 2 individuals, usually 2 companies, that might go in. They really can't afford a jet by themselves. They can't justify, they may only fly 50 hours a year, but they don't want, say, NetJets, where you don't know the pilots and you don't know the airplane you're going to get. You say, hey, I want to know what airplane I'm flying on, and I want to know the pilots because I'm going to use somebody local that flies us around. The next step up would be, no, you own the jet. You own 100% of the jet. It's your jet, and you don't share it with anybody, although you could put it in a charter arrangement to offset some of the costs, or like renting out a beach house. Obviously, once you get to joint ownership or full ownership, you own the jet, and you have to have somebody that's paying attention to maintenance, insurance, and all the things that go with owning any type of very expensive asset, whether it be a jet, a beach house, a yacht, whatever it is. You just got the trappings of ownership on that. Let's see. So starting out with the just kind of an overview, I always like to think of airplane transactions as any other type M&A transaction. It'd be the same. Let's say you're buying a $10 billion or $10 million business. You would go through a diligence process. You sign a letter of intent, purchase agreement, diligence it, and close it. A jet, let's say it's a $10 million jet. You do roughly the same thing. Obviously, there are some things that are not as important as when you're buying an operating business with employees, but you are buying a very expensive asset that is expensive to maintain and has a lot of continuing financial obligations in the form of maintenance and kind of costs that go along with owning that asset. So you would normally, if you're buying a jet, and this would be whether it's a full ownership or a joint ownership, maybe not a net jets or a jet card or a charter, but if you're even buying a fractional ownership from net jets, you'll have a letter of intent, just like in any other normal business acquisition or disposition. You'll have a letter of intent, which will outline the general terms of the transaction between the parties. That will ultimately, if that's agreeable, that will ultimately turn into a more full-blown purchase and sell agreement that has the normal stuff you would expect in any type of acquisition or disposition. What's the purchase price? When do we expect to close? What are the reps and warranties about the plane? What kind of shape is it in? A lot of people try to sell them just like cars, where they're as is, where is, but you usually have an inspection right. I always like to use brakes as an example. A plane has 6 brakes. If you need new brakes, it's about $1 million, regardless of the plane, because they run 150, 200,000 a piece. So if you buy a plane that's as is where is, and the brakes have been smoked, you're looking at $1 million liability when you buy, right after you buy the plane. So you really have to diligence the aircraft condition, pay somebody to inspect it. Obviously, just like buying a business, there's a lien search. You want to look at the maintenance programs and make sure it's critical. It's sort of like owning a German car. You want to make sure it's under warranty. You want to make sure there's a service contract that covers unexpected expenditures, and those are manufacturer service plans. Critical to have all of the records. Without the records, the plane is not airworthy. So you have to have all the records. Those used to be in paper form. They have moved more to digital. And if you're acquiring an older plane, you really want to digitize all those records. Spare parts are important. You think of a car with a spare tire. Well, it's $100. Well, you may have an auxiliary power unit for an airplane that's $100,000. We ran into this where client had already signed an agreement, comes to us, says, look at it. The ship's already sailed on it, and one thing they hadn't asked for was spare parts. Well, the seller had about $200,000 worth of spare parts, and he said, you didn't include it in the deal. And they had ultimately negotiated for that, and the client was unhappy. But that's one of the reasons why you need to think through these deals, because there are special things with airplanes that need to be asked for. You'll have an escrow agent in all these deals. It's sort of like a real estate transaction. Everything's handled out of Oklahoma City. Delivery and closing. We'll talk about kind of delivery when we get to the sales tax portion. But you have a delivery and a closing. Most of the time that's electronic and not in person like most M&A transactions now. Overview, you may have heard of some of these parts. You got Part 91, which is private aviation. That applies to all flights, including Delta or Southwest. The next level up is the next level up is Part 135, and that applies to all commercial aviation that basically for compensation when you're paying. Think probably Delta. Or if you're chartering a flight. Part 121 is any plane over 50 seats or over. So definitely Delta Southwest, which wouldn't be the topic today. Some of those guys are actually stripping out some seats, flying planes with less than 50 seats so that they can fly under the Part 121 rules. Part 43 is maintenance, and we won't talk about that. But key difference between 91 and 135. 91 is private, so it has fewer, it's a little looser. The maintenance schedules are looser. You can do maintenance annually versus if you're flying under Part 135 or 121. Generally, the requirements, it's every 100 hours of flight. A big important distinction is if you are flying, the two biggest important distinctions are a commercial flight under 135 or 121 can only take off or land if it can do so with 80% of the runway. On a private flight, it can use 100% of the runway. So if you need 3,000 feet and the runway is only 2,999 feet, you're good to go, which you can obviously see that creates a safety issue versus if you're flying commercial, you don't have to worry about that because they don't use all the runway. The other is if you're below instrument flight rating minimums, real bad weather, the Part 135 flight, if you're flying Delta, they're going to divert to another airport or they're going to circle and wait for a break in the weather. Under Part 190 or 91, you can somewhat roll the dice and you can do what's called a look-see, which means the pilot can fly around, he can dip under the clouds and look and see if he can see the runway. Obviously, that's why when you talk accidents, there are more accidents under Part 91 than under, you just don't see much in the U.S. at least with the big carriers. I will mention, we'll get into it a little later, there's a distinction between non-commercial flights and commercial flights. The IRS and the FAA do not apply the same standards, which makes the flight regulations a little more difficult to comply with and important to make sure you navigate and kind of try to thread both of those needles.
They're trying to solve for different issues. The FAA has its own set of rules that I think is based mostly on safe travel.
Absolutely.
The IRS, I don't want to say they don't care about safe travel. I'm sure they're individuals, and I'm sure they do. But the IRS is all about how is the business going to treat it for tax purposes. What matters for depreciation? What kind of record keeping do you have to keep up with? And sometimes they'll overlap, but not intentionally. And so, the reasons you keep records for FAA is completely different from the reasons you keep records and things like that for IRS purposes. We'll touch base quickly in a minute.
Correct. Yeah. This next slide is going a little more into the FAA. The FAA looks at like anytime you're being paid for the travel, that's a commercial use and would require a charter carrier license under either Part 135 or under Part 121. And the compensation might not necessarily come in the form of money for the flight. It can come in the form of, which on this slide we talked special purpose entities, and if you're familiar at all with airplanes, you probably heard of what's called the flight department trap. And the flight department trap is, most lawyers always would say, okay, if we're going to buy a risky asset, let's put it in its own little special purpose entity to isolate all the other profitable or parts of the company that have money. So we'll form an LLC, we'll buy the plane, and we want to fly the plane using that LLC so that we don't taint, the rich part of the company. Well, the FAA says you cannot do that. And that's probably the one of the biggest gotchas in the FAA world. And they say, okay, if you buy it in a special purpose entity, it has to be dry leased to either an individual or to an operating company where the operation of the airplane is, quote, incidental to and within the scope of the business. And what the policy reason for that is if the plane crashes into an apartment building, terrible scenario, falls out of the sky, crashes in an apartment building, you've got injured plaintiffs. If you had a special purpose entity, well, it may have no assets other than the plane, and the plaintiffs have no recovery if there's no insurance. And as a policy, the FAA says, well, we want those people to have an ability to recover monetary damages from somebody. And so you need to think of FAA structuring for planes more along, not as legal structuring, as more insurance. So you buy it, if you use a special purpose entity, you lease it to your operating company, and then the operating company buys as much insurance as possible. And so that's kind of and so if you have the special purpose entity, if you just flew it with the special purpose entity and you made contributions to fund the special purpose entity, that's the compensation component that the FAA would say is compensation. So, and there's some IRS repercussions for violating these rules as well, and we'll kind of get into those here shortly.
Jay, you used the term dry lease. Why don't you? Not everybody knows what a dry lease is.
Okay, yeah, that's a good point, Ronald. There's kind of two types of leases. I really can't tell you why they're called dry and wet, but there's a dry lease, which basically means I'm going to lease you the plane without pilots or flight crew. And you're going to sign a lease. I'm going to take the plane and I'm going to put gas in it. I'm going to pay all the expenses, and I'm going to hire a flight crew. And the lessor, so I'm going to be the dry lessee. I'm the guy that's going to fly the plane. The lessor can't dictate who you use as pilots. Otherwise, that's going to be deemed you can't say, hey, Ronald, I'm going to lease you the plane, but you got to use my pilots. Well, that's going to be deemed a wet lease, an indirect wet lease. And a wet lease would be, I'm going to lease you the plane with my flight crew. And that would violate the FAA, except under a narrow circumstance, which we'll if we get time, we'll talk about. It's called a timeshare arrangement. But it's very, very rare. But yeah, that's the dry lease and the wet lease concept. And then I'm going to turn it over to Ronald. We're talking about trade or business and some expenses, sales and use tax, rental tax, and then the federal excise tax on kind of the ticket tax.
Yeah, why don't you go to the next slide, Jay? I'll
All right.
let you drop that. So what we're talking about from my point of view as a corporate lawyer and a tax controversy lawyer is if we enter into these kind of transactions, what are the tax consequences of them? And so one of the things that prior to the 2017 Tax Act, which was effective in 2018, Section 162, which is ordinary and necessary business expenses, were deductible by a trade or business. But if you didn't, and you could show that it was part of your investment activities under Section 212, you were able to deduct it subject to certain floors and limitations. The 2017 Tax Act eliminated the ability to use the itemized deductions. So that brought to the fore how do we make sure that what we're doing is are expenses that are part of a really trade or business, and that's a term of art, and are they deductible as ordinary and necessary expenses under Section 162? And so, then you kind of look at, this is actually the kind of fun part about it is, why do people, Jay, you've got a number of clients that have talked to you about using the airplanes, and I, down here in Alabama, we love our football, and so we have guys, there's people down here, they want to go to football games and they don't want to really wait in line, and so they'll fly down. There's a bunch of people. We got a big game in Baton Rouge this weekend. Alabama's playing LSU, and so there's going to be a bunch of commercial jets. They're going to fly down to Baton Rouge, go to the game, and come back and be sleeping in their own bed at the end of the night. And the question will be is, what does that impact? Because those jets during the week are used hopefully for business uses. But when you have these conversations with the owners, you have to worry about what kind of expenses, what kind of things that get implicated on whether you can deduct it or not. And the biggest thing is bonus depreciation, which came about. It was really an incentive for people to go out and buy depreciable property. And prior to 2017, you had the ability to elect to expense a significant amount of purchases like that under Section 179. But as part of the 2017 Act, any property that was acquired after September 27th, 2017, that was the date, the effective date, is eligible for 100% bonus depreciation, which means the entire purchase price of a plane in this example, could be other kinds of equipment, can be deducted in the first year by the taxpayer if they operate this for a business purpose. And if you don't use that one-time expense, then you deduct it over using a straight line depreciation over a long period of time. That's important. Jay, I don't know when you have conversations, why don't you talk about the kind of conversations you have with your clients when they're talking about whether they do that? What are the things that they have to worry about in terms of how much business use do they have to have?
Well, yeah, and I get this call a lot frequently on the front end, where a client is considering buying a jet, and you go through the normal financial analysis of, well, can you justify a jet? Have you tried charter? And a lot of the people that come to us, they've already chartered jets. And then you go through well, can you justify it? And what are you going to use it for? I see very few clients. I got a few that are 100% personal. It's just like a sports car. I've just got it and I'm retired and I'm wealthy and I use it. Most of them are business owners, and in the public company context, it's going to be almost all 100% business. That's not really a big issue. But a lot of
They have more limitations than
there's more limitations, and there's a slide later on SEC compensation. I won't talk about that, but obviously there's some SEC reporting rules on that. So public companies are a lot more strict on private use. When you get into family-owned companies, whether it be a single owner or a family or a closely held business, they own a jet. There's obviously the question comes up, well, how much is business and how much is personal? And you have to go through the education process of, well, you've got to use it a lot for business purpose. You got to be over 50%. If you want bonus depreciation, you really need to be at 100%, preferably in the first year. And then you kind of have to go as a lawyer. You have to play well, what are you going to do? Well, where are you flying? What do you normally fly to? It's like, oh, well, I do a lot of business down at the beach. That's where my beach house is.
And that kind of, I want to talk about a couple of cases.
Yeah, okay,
that
great.
you and I've talked about in that, and we see closely held business, and maybe Jane, I've got a client who's in a business of manufacturing equipment that he uses to sell to other people in that industry. I'm trying to keep the identity of everybody kind of confidential. When that person started growing the business, he started having manufacturing plants all over the country. It does not make sense for him to go to the airport and spend his time going through the TSA testing and all that kind of stuff. So if he wants to go from the East Coast to the West Coast and look at different manufacturing facilities, he can do that. That's kind of easy.
Yes, that's easy.
As long as that person doesn't fly to Switzerland on a regular basis for personal vacations with that jet.
He does fly to the Bahamas quite a bit, and I have cautioned him about the Bahama trips, that he can't just say I'm looking for rental property.
But the point is that to be able to show that it's ordinary and necessary, you have to show that there's a business logic to it. There's a couple of cases where it seems to be that the lawyers are the ones that violate these rules. A couple of cases I want to tell you about. One is the Peterson case, which is a tax court case, a tax court memo 2015-1. And this was a fellow out in California that bought a plane. He was a personal injury lawyer in Los Angeles, and he bought a Cessna Turbo Skyline, a little plane. And during those 2 years, he used 270 hours in 1 year and 100 hours, he says, for business. And what's really kind of funny is when you drill down in the cases, most of the flights that he took were less than 100 miles away from LA. And when you look at the testimony in the case that's reported in the decision, the judge looked at it with the John's eye, saying, that doesn't really make sense to spend, and the cost per hour were like almost 300 and 400 each year. And so does that really make sense from a business point of view to use an airplane? The other thing is that he flew all over the place. He went to Wyoming and to Montana to visit family, and he went to Las Vegas, and he went to Napa, and he went to all kind of vacation kind of places. And he always had a reason. He actually documented his reasons, but his reasons didn't really hold water, so to speak. And so that case kind of shows you a situation where the court said, these are not ordinary and necessary business expenses, and so we're not going to allow you, except to the extent he could substantiate. We'll talk about substantiation, which is a really important issue. He couldn't show it's ordinary and necessary, and so that's one of the cases. Another one is Eggstrom case, which is a TC memo case from 2014-221, and it was the same kind of case. You had a law firm and this was another plaintiff's law firm that was involved in pretty high profile litigation.
They had a Gulfstream.
Yeah, they had a Gulfstream.
A big plane.
And this was one that had a more complicated fact pattern, because you had this plane was owned in an entity, an LLC, one by one law firm and another firm. One firm actually used it for business, the other firm didn't.
With no written leases or anything.
Yeah, and one of the things that's amazing is there's no written agreements, so they didn't dot their i's and they didn't cross their t's. They didn't keep up with the records to substantiate the expenses, and one of the things that you have to look at under the substantiation rules under 274 is that in order to substantiate deductions like this, it's just like your car expenses. The deductions under 162 are not allowed for listed property, and an airplane like this is listed property, unless the taxpayer substantiates by adequate records or by sufficient evidence corroborating the taxpayer's own statement. Listed property, that includes cars or planes, and you have to show the amount of the expense, the time and place of travel or use, and the business purpose. Now, you had mentioned a couple of minutes ago, and to do that, the regulations under this is under 274D say you usually keep an account book or a log or similar record, documentary evidence that which together establish each element of the expenditure. And it's better, according to the regulations, to do it contemporaneously. So you
Absolutely.
don't come up 3 years later when you're under audit and say, oh, now it's time to put together my books and records to try to do it. But sometimes that's all you've got. I mean, we've
That's
had
right.
lots of clients that have gotten into audits, a lot to do with other kinds of expenses than airplanes, but they've got the exact same issue. We had this guy who was an investment banker guy in Birmingham, and he had a farm out in the middle of nowhere, and he was going to develop it into a hunting and fishing ranch where people would pay a lot of money to go bag bag big bucks and catch big bass. And so he spent a couple of years developing the property. He bought it, had to bush hog it. He didn't know what a bush hog was before that. And he made trips every week to go out to the farm to work on it. And so we had to show that it wasn't a hobby. And we went through those kind of issues, which you don't usually have with an
How big of
airplane.
an amount was his claim, his deduction?
Well, they tried to deny all the deductions. So it was depreciation on a lot of equipment, depreciation on buildings.
A pretty
and then
big
all of that
number,
pop-
right?
Yeah, we're talking about six-figure numbers.
Yeah, same
over
with
a couple of
airplanes.
years.
Big numbers.
And so we had to substantiate that he actually went out there, and we were able to show the business purpose for it ultimately with testimony from other people. But to substantiate his deductions and that he actually did it, we ended up finding that every time he went out to the country to go to his farm, he stopped at the same Texaco station and bought gas. And so we were able to put together a book of weeks and weeks and weeks and weeks of substantiation of those expenses. And that's how we proved out and we settled the case in IRS appeals instead of having to go to court, which is your objective. You don't want to go to court. I mean, if
Yeah.
you have to go to tax controversy, you're going to be spending some bucks.
So the rule there is do it on the front end, not the back end.
That's right. So you have to show that it's ordinary and necessary to satisfy the 162 trade or business expenses. They have to be reasonable in amount. You can't, in the first case, the Peterson case I was telling you about, he was spending ridiculous numbers for flying. And, one of the things that Judge Lauber, who was the judge in the case, said, this guy already professed to really enjoy flying. And that's kind of an issue that you see in the hobby loss cases. And it's going to find its way into these kind of cases as to whether you got a good trade or business.
Well, it's tougher too because he was flying his own plane,
That's right.
which is hard because then it does look a little more personal.
So the point of this part of our discussion is, the deduction, the biggest deduction that you're looking at is depreciation. And as you said, you have to show that your predominant use is business to get this, the one-time depreciation deduction all up front. If you don't have that, then the code sections under 270F, I think, says that you actually recapture some of that use. If you use it 100% for business in year one, and then in year 2 or 3 it drops down below 50%, you may have a recapture and a rejiggering of the depreciation deduction. So another thing that we see, and I don't know how many people who are participating in this program work in family offices, but the rules regarding family offices have really changed over the last few years because of a case called lender management. Anybody that's in the family office world probably is familiar with it. It was a 2017 TC memo, and I won't go into the great details of the case, but it was the family office of the people who make Lender's bagels, and the frozen one
Yep,
you buy in the grocery store. I will tell you, it's not the kind of bagels I grew up eating, but they're easy, and that's a successful business. They're ubiquitous in the market. You see them in every grocery store. And in that case, you had the founder of the business, Harry Lender, owned a family business, and a family office is a way for family groups to manage their own investments. And a lot of times it's hard to show that it's a trade or business because all you're doing is handling investments. And under the Higgins versus Smith decision a long time ago in the Supreme Court, just managing your own investments doesn't rise to the level of a trade or business under Section 212. And so what they showed in this case that was different was the way this was set up, and you have to read the case to see that they had family members that could choose to use the investment advice of this family office or not use it. They kind of were compared to a hedge fund manager in this business, the lawyers and the accountants and the financial planners. That
They had an
there.
executive team, I think 10 people or
Sure.
something like that.
But what was different about this case is the tax court held that it wasn't just we're just investing our money. Each family group would make its investment decisions based on the choices that were there, based on their own goals and objectives. And so if you've got an airplane that's going to be owned by in a family office, and you want to avoid it being treated as not trade or business expense, you want to look at this case as one that that might be worthwhile.
There's an important point on the family office too, and any business in general. There's also a reasonableness test in addition to the substantiation.
Sure.
The IRS has started attacking the reasonableness. And you think of the size, okay, we had a client that had a global business that had a it's either I think it was G650. It was a new plane. It just came off the line about a year ago. Selling the company for $2 billion, going to get a big pocket full of change. And he wanted basically his jet. It was owned by the company, but it was kind of his jet, and he wanted it. But he didn't have a family office established yet. And so the first thing was, well, under the lender case, you can have a family office, but you really got to have it set up when you buy the asset. And he hadn't sold his company yet, so he didn't have it set up. The next thing would be, well, your company you're selling is a global business. There's no doubt about that. And they had a huge executive team. But when you go to a family office, how big a jet do you need to manage your investments? Well, the IRS has attacked that and said, well, you don't really need a G6 to float around. Maybe, let's say you owned a couple of companies in the U.S., maybe you need a Cessna. You don't need a $60 million jet, but we'll give you a $3 million jet or a $5 million jet. So there's a reasonableness component that usually is not attacked. They don't ask whether I should buy a $1 pen or a $5 pen, but when you're talking a $5 million jet or a $50 million jet, the reasonableness comes in.
And if you think about it, the revenue agents, the guys that work for the IRS, they don't make millions of dollars. They're accountants.
They don't?
No, they don't. They are kind of pencil pushers, and they're following the Internal Revenue Manual, and they're told in the Internal Revenue Manual to look at these expenses and are they ordinary and necessary, facts and circumstances analysis. But what you're talking about is you don't need a 747 for a little family office that flies to a couple of other places during the year. And many family offices won't need an airplane if they're really just doing investment. But a lot of those, they're managing properties that are all over the place. I've got one client who's in the business of building kind of spec buildings, small box buildings all over. And so it's not quite a family office, but it's owned by a family, so you could look at it that way. And so instead of having to drive all over the United States to look at different locations in small towns all over the place, it's a lot easier to fly in a plane. And so that cuts their expenses down a lot. And they can actually, leave Birmingham, visit 5 locations in one day, and then be back at home.
And that's a great point, which is there's an ordinary and necessary component of, can you access the locations via commercial jet?
Right.
And a lot of these locations that Ron's talking about for this particular client, and a lot of our clients are for the participant on the phone, probably have, let's say you got a plant that's in some remote area. Yeah, you could fly into the Atlanta airport or the Dallas airport, but it may be an hour and a half drive to Podunkville to get to the plant and then back. And you can't access it. Delta doesn't fly there. And so if you're going to go see 3 or 4 of them in a day and they can't be accessed by commercial flights, then that greatly enhances your ability to claim that it's ordinary and necessary because I can't access these just by buying an airline ticket.
And what you have to be prepared to do is tell that story, because if you're going to get audited, you have nothing to lose by making sure that you have a policy, internal policy, that you made a decision. It makes no sense for us to go through commercial airlines because of the loss of time or other reasons. There's going to be other business reasons. You want to flip to the next slide. We've
Yeah.
already talked about some of these issues, the depreciation of whether you got the bonus or the straight line in the first year use. That's really important. Qualified business use, we've talked about being defined in section 280F as more than 50%. State depreciation, we just really noted this because some rules piggyback the federal government and some states don't.
Yeah, we had a client that bought a jet based out of New York, and New York does not allow bonus depreciation, it's straight line. And let's just say that created an issue between him and his accounting firm, that they did not point that out to him.
Well, it's hard to know 50 jurisdictions
That's right.
And sometimes they use computers to do those returns. It's just, if you're a general counsel representing a big business, just be, and you are aware, because you have to deal with state and local issues all the time, that bonus depreciation does not necessarily apply in all states.
Yeah.
Also, that one of the changes in the 17 Act was the elimination of the ability to use 1031 or like-kind exchanges outside of the real estate world. And so in the airplane world, there's often people that have got a plane, I've been using it for 5 years, I don't want to throw it away.
I'm upgrading.
It still has value, and I'm upgrading. That's what they all say. And so it used to be they kind of traded in just like you trade your car in and get some kind of value, but nobody ever made money on your car.
That's right.
But airplanes can appreciate, and if they've been depreciated for tax purposes, your basis in that plane is probably worth less than it is. And so really what you've got, if you're going to be trading it in on a new model, is you've got two transactions.
That's right.
You've got a transaction where you're selling the plane that you've been using and you're buying a new plane. Now, what's good about the bonus depreciation is even though you can't do a like-kind exchange to defer that gain, you can kind of cover it. If you're buying a bigger plane and can use the bonus depreciation, that depreciation, depending on the fact pattern, can offset the gain that you recognize. And so that's one of the techniques that we see people use.
Literally just had this come in this week. Client is doing it the opposite. They're buying a new plane first, and then they're going to sell their plane. I was on the phone with their CFO 2 days ago and said, hey, well, you're going to get the bonus depreciation. She said, we need the bonus depreciation to offset the income we've had this year. And I said, that's great. But remember, when you sell your other plane, there's this recapture and there's no like kind. And I said, when do you plan on doing that? It's getting kind of late in the year. She goes, oh gosh, we hadn't thought about that. And so we can't take this. I think their current plane is $5 million. They're gonna have a $5 million hit on income next year. So it's a deferral technique, but they hadn't thought through.
What that does is it makes you think about matching of related income and expense. And it really kind of leads into the next issue. And in the fact pattern you're talking about, you'll have a bunch of income this year, may or may not be passive income. And then they'll have a loss next year. So what happens that businesses have to worry about in losses? If you're a flow-through entity, you have to worry about basis. You have to worry about the at-risk rules, the horrible set of rules. You have to worry about the passive activity loss rules, which has to do with, are you entering into a trade or business in which you do not materially participate? And then you go into a whole bunch of analysis of whether you can group different activities for that purposes and plan around it. And is it a rental activity that's subject to a per se passive rule? And are you materially participating in the activity? And we just don't have time to go through that. But what that shows is if you're going through these airplane transactions where you've got income in 1 year and creating a later loss, are you subject to these loss limitation rules? And a couple of new ones came in the 2017 Act, which includes a basic limitation on the ability to flow through losses, and you have limitation on the ability to use net operating losses on carry forwards. And there's also limitations on the use of business interest. And we do not have time to really talk about it, but these are things that as owners of airplanes, those things will come before. And it kind of shows, you can kind of go to the next page. The last is, if we've got a business and it's treated as a qualified business and you're a flow-through entity, how does the Section 199A deduction, which was enacted as part of the last round of tax reform, really, they lowered the top C corporate rates, and all of a sudden flow-through entities were saying, wait a second, now we have individual rates that are higher, and that's not fair. So now under 199A, if you have business income that is qualified business income, you get a deduction, and there's a bunch of limitations. I've written a couple articles on that. We do not have time to talk about it today. But those rules will help your ability to deduct, because you get a deduction at that level for the flow through entity
Yeah.
if you qualify. And the question is, are you a qualified trade or business? Which again goes to the same trade or business issue that you look at. And there's a series of, it's case law that determines whether you're subject
Yeah.
to that. And then just whether you qualify or not, it's not particularly unique to airplanes, but it's another level of tax that you want to think about. It's funny when we're preparing for these things, and we have to get at least to slide 17. So, so why don't we talk on really on this slide? I don't want to spend a huge amount of time on it because we've talked about it. The main issues from a tax point of view, these issues are depreciation, the limitation on losses. But when they get challenged, you're going to have to be able to say you substantiated. You have to look at the 274 rules and listen to your accountants. They will tell you, that's their job, what you have to document. And what you document for FAA purposes is really not the same thing. And you might just address that, and then we can kind of go on to sales tax, which I let you handle.
Yeah, on the sales tax, the sales use tax and property tax. So the property tax, obviously wherever you hangar the plane is generally where you're going to owe property tax. Now that can get a little bit complicated if the jet's in multiple different locations. We won't kind of focus on that. The sales and use tax, the important thing on sales and use tax goes back to the acquisition of a plane, and you may have heard of what's called a flyaway exemption, which is, hey, if I buy it in a certain state and I fly it out within a certain amount of time, usually sometimes it's 48 hours, sometimes it's a week, I don't pay any sales tax. When it comes into your state, you're going to owe a use tax. And I don't know about all 50 states. I know most states, including Alabama, have a person that monitors all these flights are public records. So they will monitor, hey, there's a new Gulfstream G5 sitting out at the Birmingham airport. Whose is it? And why haven't they paid use tax on it? And why haven't they paid property tax? And it literally doesn't take them 45 to 60 days, and you will receive a letter in Alabama that says, hey, we've noticed you got a G5 parked at the Birmingham airport. You owe tax on it. The flyaway exemption is important, and I use Gulfstream as an example. Gulfstream is headquartered in Georgia. They do a lot of their maintenance in Georgia. If you are buying a plane and you say, hey, well, we'll just take delivery at the inspection facility or the maintenance facility. Well, guess what? Georgia does not have a flyaway exemption. Georgia's going to say you owe Georgia sales tax. And then when you fly it over to Alabama or wherever your state is, Alabama's going to say you owe sales tax. And so you may end up paying double sales tax. So you always want to fly it, make sure you're in a state with an exemption. And the last Gulfstream I did, we actually flew it to South Carolina, filled it up with gas, took a picture of the receipt and the pilot in South Carolina, and then flew it back. And we did the closing while it was in South Carolina to make sure if Georgia ever said anything, we had evidence, again, substantiation that we did not buy the plane in Georgia.
So that the state and local tax seems small, but it's all the time.
Well, it's a large percentage, and these are high dollars. $10 million jet, 5%. It's a big number,
and it's a small universe of people that they have to look at. This slide really illustrates the issue. Let's say that you have an aircraft and you allow an employee to use it for personal use. One of the exemptions on some of the depreciation deduction limitations is if you treat it as compensation. And Jay, what you do employee benefits. So how do you deal with this employee benefit issue in terms of valuing what the amount of the employee benefit is for?
There's either you really have two rules, and I can tell you, I think I've never seen fair market value used, but you usually use a standard industry fair level. So if you're using a jet, CEO flies on it to his beach house, or let's say you're taking a trip and the wife flies along, you're going to charge him phantom income, and the IRS publishes a standard industry fair level, and it basically equates to an airline ticket. Fair market value is a little more complex of just kind of coming up with the fair market value. I've never seen anybody use fair market value. The other way to handle that is to say, listen, we don't allow any flight under those rules. Ronald, you can lease the plane, and then it's leased to you and you pay it, and you'll write the check back to us for the lease rate, but you can't deduct it because it's personal. And so you can do a dry lease, or you could sometimes, I may have the plane in a charter management program where they manage it and we'll say, hey, you can't fly it on us, but you can go to the charter management program and you have priority access to the corporate jet.
So the point is to pay attention when an employee wants to use it for personal use.
Yes.
It either has to be included in their income or they have to lease it themselves or take responsibility for the operating costs.
Yes.
You can go to the next slide. And this doesn't happen a whole lot, but we do, one of our clients, we had to consider, are you using your airplane to commute? The regulations under 274L talk about you really don't get to generally deduct the cost of commuting. And that mostly has to do with an automobile, but it also applies to airplanes.
Yeah.
And but it applies at the statute, the way it's written, seems to apply to employees only. So you just have to be, I would just say, because we don't want to spend a ton of time, be aware that the fact pattern that we've got, in our case, you had to worry about. You had a guy that, lived in a big city, he had a home office. He flew from there to his other offices from time to time. And so the question that we all kind of have this aha moment, is that commuting? And so you have to logic your way through and come up with what the story is, because the regulations don't really address that particular issue.
They don't address what's non-deductible either. Is it the entire expense? Is it, if you include in income, do you get to deduct the expense, or that? It's tough there. The general exception is hey, if you can show that you're ensuring the safety,
Right.
maybe that's allowed.
And then, if it's for safety, whatever that means.
Whatever that means. That's a good question.
So the last kind of key point we want to talk about is that in the 2017 Tax Cut and Jobs Act disallowed the use of deductibility of entertainment expenses or use of airplanes or facilities for that. And so one of the things you have to look at is you often have mixed use of property. There's a Chief Counsel Advice memo called Chief Counsel Advice, or CCA 2021-17-0112. That's 2021-17-0112, where the Chief Counsel advised that a sole proprietor that owned an airplane, and that whether it's directly or through an LLC, can use the primary purpose test, more than 50%, to determine whether expenses for the use of an airplane are deductible. And so when you're looking at business entertainment, you might have some of it's for business and some of it's for entertainment. You lose the deductibility of the entertainment, but you don't want to lose the ability to depreciate by using it for a non-business purpose. And so we just kind of call that into account, that CCA references a case called Burns versus Commissioner, which is a 2009 case which disallowed travel expense deductions because the primary purpose of a trip was to visit family and friends. It's a facts and circumstances analysis. And it's really just something that we wanted to talk about. So let's go to the next slide. And this is one we just wanted to say, if you're licensed in New York, New Jersey, Kansas, or Pennsylvania, please type and submit the CLE code word in this box on the Q&A box on the right side of the screen. If you don't have a license in the state, you don't have to worry about it. And we will tell you, when we were preparing for this, the word was different from aviation just slightly, so spell check doesn't catch everything. I think once you cover this, because I know we want to get outside of the tax issues and finish on the SAT.
And this sort of gets into the compensation for hire, which is called the ticket tax, and it's 7.5% of any amount paid. And this is where if you violate the flight department trap, you got one set of FAA problems, but the IRS will come in and say, well, that was a flight for compensation, and we want 7.5% of the total amount, which is the total cost of operations, not just the fare level. They say, well, you paid $1 million for operation of the jet last year. You didn't have it set up right. We want 7.5% of that, $75,000 plus interest and penalties. And by the way, this is a return that has to be filed. And since you didn't file a return, there's no statute of limitations. And so they can go back as far as you've owned the jet to get their 7.5%. There's one little thing I've got to mention, which is if you use a special purpose entity, Section 4261 of the Internal Revenue Code says that this is the ticket tax under 4261. There's an exception for use of a third-party management company. But the way the statute reads under 4261E5 is only if it's paid for by the owner of the airplane. and there's a question, the IRS hasn't ruled on it, there are no regs on it, but the statute says the owner of the airplane. It doesn't say, well, what happens if there's a disregarded entity, a special purpose LLC? Does that still count if the special purpose LLC puts it into a charter management program and there's payments going back and forth between your charter company, you charge 7.5% on that? Or if it's owned by kind of the operating business and it puts it in, well, the statute covers that. So we don't know the answer to that. It's one of those interesting, who knows?
One of the people have asked about, can't see the slide. If you go to the next one, I think the code word was aviation.
Yeah, code word was aviation if you didn't see it. I think we hit the state tax issues, we hit the flyaway exemption, rental tax. So you normally pay sales or use tax. Let's say you buy it out of state, you fly it into Alabama, you'd normally be subject to use tax. But let's say you've used a special purpose entity because you do want to try to protect some liability, get some liability protection, you lease it to your operating company. Alabama requires that you pay a rental tax or collect a rental tax, and because you're now renting the plane to somebody, you're leasing it to somebody. And so most states do have a rental tax regime that you have to be aware of if you are using a dry lease type arrangement.
And that applies to other types of property. It's a flavor of the sales tax, because if I buy something to lease it to somebody else, I usually have an exemption from paying the sales tax, but then I have to collect the rental tax when they pay rent.
Correct.
And that's
Correct.
what that is. Why don't you, we've just got a very short period of time,
Yep.
so you might want to look at what are the last things you want to say about some the ancillary issues that are most important.
Hit that. Let's see. Ancillary issues. You obviously got, who's going to employ the pilots. If you're using a third-party management company, then it's not your problem. But a lot of companies employ their own pilots, and it's like any other employment agreement, but you need to figure out, well, you're going to have to pay a lot of expenses for training. How do you recapture those? Is there some type of payback if they leave? And there aren't really many special issues in that, but you do have to be aware of that. There usually is some type of recoupment. There also has to be some type of, they are in operational control, and that sometimes can create some issues. The hangar leases are sort of like an office lease, except you're parking a plane in it. You want to make sure there's adequate insurance by the lessor, probably the fixed base operator, the FBO. Critical component is to figure out what type of fire suppression system do they use and make sure it's covered, because we've had one where it got accidentally set off, and that fire suppression foam can be extremely corrosive. And then you have to have a system of monitoring the corrosion and making a claim under the insurance. Insurance is obviously, we could talk a day about insurance. I think I always like to say, remember, the insurance company's job is to collect premiums and to not pay out. So they always want to find a way to not pay out. So if you haven't set it up and you're in violation of FAA rules and there's an accident, it could even be on the ground, you run into a building, they're going to find a way to not pay. And they can say, well, you've got it set up wrong. You're in violation of the FAA rules and we're not going to pay the claim.
So we're kind of at the end. I want to tell you, these slides are available to you. I'm not sure how they'll get them to you, but we were told that they would be available. We're certainly able, I see there may be a couple of questions. We'll respond to those. If you have any questions, I know we're running into the end and another panel is going to start, so we can't go into their time, but we really do appreciate the time you spent with us. Hope you found this useful and uplifting, to use another pun. And, we thank you very much.
Yep. We really appreciate it.
Thank you both for your excellent presentation. We're going to move on to Tyler Coe, Brianna Young, and Max Moitz.
We are. Howdy, y'all. Thanks so much for having us today. I'm Max Moitz. I'm one of the presenters today. I'll let the other presenters also introduce themselves, and then I'll get started on my part too.
Hi there, I'm Brianna Young, and I am a shareholder attorney with our Des Moines office, Denson Davis Brown PC, and I specialize in wills, trusts, and other estate planning matters and helping LGBTQ individuals protect and empower their families with powers of attorney, wills, adoptions, and more.
Hello, Tyler Coe. I am a shareholder at Denton, Davis Brown in Des Moines, Iowa as well. My practice area is probably the best that you'll hear about. It is divorce law. And what I do there is I help families of all types with a large client base of LGBTQ plus individuals and families. And it's great to be with you here today.
Awesome. Well, again, like I said before, I'm Max Mowitz, and I'm going to be taking you through the first half or so of this presentation today. I work at One Iowa, which is the statewide LGBTQ advocacy organization. And so I'm going to talk a little bit about what does it mean to be LGBTQ? What community are we talking about before I let Tyler and Brianna take it over? So I am going to dive right in. We always start our presentations at One Iowa with a land declaration. In case you're not familiar, a land declaration is an acknowledgement of the stolen Native and Indigenous lands that we are on. So no matter where you are on stolen Native and Indigenous lands. We also love to shout out our friends at Great Plains Action Society. They do incredible Native and Indigenous liberation work here in Iowa. Some quick group agreements that are really important as we dive in. I know that folks feel really overwhelmed when talking about the LGBTQ community. They're afraid of doing something wrong. So I wanted to kind of ground us in some best practices. The first is the confidentiality rule. What happens in Vegas stays in Vegas. Of course, we're all, coming together virtually in this way. But really, the point of this is that we don't want to share other folks' personal anecdotes or questions, but rather, the only thing we want to share out today is what myself and the other two presenters present to you all, right? So if somebody has a question or a personal story, we want to keep that in this virtual space. The second piece of this is that there's no such thing as a silly question. Listen, it's not very often that you're going to be able to ask an expert in the field about LGBTQ issues any question that you want. There's no question that will upset or offend me personally. So please feel free to pop questions in the chat. I would love to hear from you, especially because some of these terms and this terminology might be really new and might be a little bit overwhelming. So we want to create a safe space for you to ask questions. And then, of course, I assume positive intent of everyone here on this call today. I assume that you all want to learn and grow and be more inclusive to LGBTQ individuals that you're working with, because you may or may not know that you work with LGBTQ individuals, but you definitely do. So it's really important to have some of this information in that work. So as we talk and move forward, I just wanted to mention that, we're a resource here for you all three of us. Really want to make sure that you all feel equipped with the information that you need. So please feel free to reach out. I would love to hear from you, at least personally. I love to get emails after trainings, with questions or thoughts and things like that. But one thing that I always like to emphasize before I get started on curriculum is you don't have to ace a quiz on this material to be inclusive. You don't have to have every single term memorized. In fact, that's not actually the goal. The goal today is to give you a primer to help you understand some of the basic information, but alongside that, to make sure that you also feel like you have some habits and skills that you can develop. Those habits and skills are going to be much more meaningful and impactful than knowing every piece of terminology exactly perfectly, right? Because humans are more complicated than that. So that's what we're going to focus on today. But that willingness to continue to learn after today's presentation is also going to be really important because we just have a short period of time with you all. So want to make sure that you continue to keep learning. So really quickly, I'm going to dive into the acronym itself. I get a lot of folks asking me questions on kind of that alphabet soup that it can feel like. So I thought I would dive right in. We will start with the L. The L stands for lesbian. A lesbian is typically a woman that is sexually and or romantically attracted to other women. The G stands for gay. A gay person is typically a man who is sexually and or romantically attracted to other men, although the term gay is often used as an umbrella term. So if you're familiar with Ellen DeGeneres, she identifies both as a lesbian and as a gay woman. That's totally valid as well. The B stands for bisexual, and a bisexual person is a person that is sexually and or romantically attracted to people of 2 or more genders. So that's where we get the bi and bisexual, is for the 2 or more genders that somebody can be attracted to. Now, these 3 terms are blocked out in green here because they are describing sexual orientations. Sexual orientation is the persistent pattern of sexual and or romantic attraction to other folks. This is different from the T in LGBT because the T in LGBT stands for trans or transgender, which is a person that does not identify with the sex that they were assigned at birth. This is different. It's a gender identity. A gender identity is the persistent and internal sense of one's own gender. This is really helpful to understand and get the hang of the difference between these 2 terms. But one easy way to kind of remember them is that sexual orientation is who you go on a date with, and gender identity is who you go on a date as. This brings me to the Q in LGBTQ. The Q stands for both queer and questioning. We can start with questioning first. A person that's questioning is a person that's figuring out their sexual orientation, their gender identity, or both at the same time, which is why it's not blocked out in orange or in green. It can describe either. Additionally, the term queer refers to anybody that's part of the broader LGBTQ community. And the word queer is an interesting one because it's not terribly prescriptive, right? The term lesbian tells us a decent amount about a person, whereas the term queer is really broad in general. And that's why a lot of people really like it, because it feels really affirming to them. It doesn't make them feel like they have to fit into a certain box. But the thing we want to be thoughtful about with the word queer is that it is what we refer to as a reclaimed term. A reclaimed term is a word that has been used against a community as a slur that has been reclaimed by that community as a positive word. So you might have kind of a nervous or anxious relationship with the word queer because you're not sure when it's appropriate to use. This brings me to one of the biggest recommendations that I make when working with LGBTQ clients, and that is to listen to the way that a person talks about themselves and mirror that language back to them. So if you have, a friend and your friend says, "Hi, I'm Mary, I'm a lesbian," what you wouldn't want to do is refer to Mary as, say, a queer woman, right? Because you don't know what her relationship with the word queer is. It might not feel affirming to her, but you have heard her self-identify as a lesbian. So when appropriate, that could be the language that you use. So individualization is going to be really important instead of trying to figure out what somebody is or try to apply terms to people when you don't know that they fit. Rather, it's much more helpful to listen to the way a person talks about themselves and mirror that language. So there are a lot of different terms under the sexual orientation umbrella. I'm just going to get to a couple today. So like I said before, sexual orientation is that pattern of sexual or romantic attraction to other people. A lot of people are familiar with what it means to be straight, but in case you're not, a straight person is a person that is sexually and or romantically attracted to somebody of a gender different from their own. Now, we talked about lesbian, gay, and bisexual already, but I would really love to drill down on the difference between bisexual and pansexual. This is especially going to be important to understand if you work with younger LGBTQ folks, because we find that a lot of folks like millennial age or younger tend to really resonate with the term pansexual, although we do see older LGBTQ adults that identify as pansexual as well. So the big difference between bisexual and pansexual is that a bisexual person is a person that is sexually and or romantically attracted to people of 2 or more genders, whereas a pansexual person is a person that is sexually and or romantically attracted to somebody regardless of gender. This means that the gender of the person doesn't play a role in the attraction that that person has to them. If this feels like 2 similar terms, let me give you another example. So let's say we have a bisexual person and a pansexual person fill out a dating profile. The bisexual person might say, "I'm attracted to, say, men and women." Whereas the pansexual person might say, "I'm attracted to people that love to hike, or people that value honesty, or people that value social justice." So as you can see, it has a lot more to do with the values and the characteristics of that person than it does their gender identity. That being said, one of the amazing things about the LGBTQ community is the complexity with which we understand our own identities. And so that's all to say that sometimes these terms are used interchangeably by people, and that is okay. We want to allow for that human part of these identities and not get too fixated and focused on rigid definitions. Now, that brings me to asexual folks. Asexual folks are folks that do not experience sexual or romantic attraction to other folks. This is different from celibacy, and celibacy is the intentional act or choice to not engage sexually with somebody else, whereas asexuality, just like all sexual orientations, is not a choice. And this is because it's determined by a lot of different factors, pretty young, right? So as a result, you can't change it through therapy because it's not a mental illness or an emotional problem. The other thing we want to be thoughtful about, especially when we work with LGBTQ families, is that sexual orientation is actually pretty different from sexual behavior. So a really good example that I like to give when I think about this difference is that let's take, for example, a man in his mid-60s. And let's say he has a wife and 2 kids. And let's say, he turns 65 and he decides that he is finally ready to come out as gay. Maybe it's his first time he's ever felt safe and comfortable in the community. Maybe it's his first time having the resources that he needs to be out as a gay man. But nonetheless, his sexual orientation is that he is a gay man. Now, this is different than his sexual behavior, right? Because he has a wife and 2 kids. That doesn't make him any less of a gay man. It just means that sometimes life is complicated and our orientation and our behavior don't always line up. That doesn't make him any less of a gay man. It just means that there's that added complexity. So this brings me into sex and gender identity and gender expression, all these kind of parts of the equation that are really fun to think about. So sex is just a biological classification. It refers to hormones, chromosomes, internal and external reproductive anatomy. It's also something that's recognized by the state as well. If sex is what's happening in the body, then gender is what's happening all around us. Gender is highly influenced by societal expectations. In fact, if I were to ask the average person not running down the street, hopefully, walking down the street, what the genders are, they would probably say men and women. And this is what we refer to as the gender binary, which is the idea that you're either a man or a woman, right? That's what a binary is. It's a choice of one or the other, zeros or one, in this case, men and women. So this is really important to keep in mind because you cannot know the sex of a person by knowing their gender identity. And we're going to talk about this a little bit later as well. But it's important to understand too that you cannot necessarily know one with the other, and that these two things might not always be the same for every person. So let me give you an example of this. When it comes to gender identity, which again is that persistent internal sense of one's own gender. Everyone on this call has a gender identity. Whether or not you think about it very much, you have one. Congratulations. For a lot of people, this does line up with the sex that they were assigned at birth. So I actually live pretty close to Blank Children's Hospital here in downtown Des Moines. I actually was born there, which is kind of wild to think of. And I always think about the babies being born at that hospital like this afternoon. So let's take a baby. The baby is born and the doctor takes a look at it and based on its sex characteristics assigns it female at birth. If that baby were to grow up to identify as, say, a woman, then that woman is a cisgender woman because she identifies with the same gender that lines up with the sex she was assigned at birth. But let's take that same baby, assigned female at birth. If that baby were to grow up to identify as, say, a man, then that man is a transgender man because he does not identify with the sex that he was assigned at birth. So this is a really important area to understand. That's the big difference between cisgender and transgender. I get a lot of really good questions about that. We'll come back to that here in a moment as well. But the thing to keep in mind is that our gender identity doesn't always line up with our appearance. And we're going to talk more about that when we talk about gender expression in a moment. But this is a sweet little Venn diagram that shows you another way to think about this. So if your sex assigned at birth overlaps with your gender identity, then you are cisgender. And of course, this isn't a proportional Venn diagram because the vast majority of the population is cisgender. Now, let's talk about gender expression. This is super fun to dive into. Gender expression is the way that you talk, dress, and act that can communicate to other folks who you might be, how you might identify. Might is heavy asterisk there. So think about the way that you're expressing your gender today. Are you wearing your hair long or short? Is it up or down? Are you wearing perfume or cologne? Are you wearing jewelry? Are you wearing makeup? Are you wearing pants or a dress? These are all components of gender expression. In fact, when you woke up and got ready for work this morning, you made a series of decisions about your gender expression, whether or not you think about it very much, right? So gender expression is very interesting, and it's an important piece of understanding how to work with LGBTQ individuals and really any client, right? Because when we first meet someone, we are inclined to categorize them or try to figure out who they might be. And this is where we kind of want to pause. So one thing to keep in mind with gender expression is that it has nothing to do with biological sex. So I'll give myself as an example. Today I'm wearing a tan turtleneck sweater, and I'm wearing this for a couple of reasons. The first is that it is a classic Iowa fall day. You never know what you're gonna get, if it's gonna be super cold or super warm. So I wore something that would work both ways, right? Even as it warms up through the afternoon. So the weather had something to do with what I was dressed as. The second piece of this is that I'm giving a presentation. So I wanted to wear something that felt appropriate for giving a presentation, right? So what I was doing that day at work also influenced what I was going to wear, right? And then the third reason, and probably the most important reason that I'm wearing this, is because I like this sweater. It makes me feel great, right? And that's really how gender expression should make you feel. You know, think about your favorite thing to wear to a wedding, or your favorite outfit that you wear when you want to have a really, really good day, right? That has a lot to do with your gender expression as well. But none of that has to do, for example, with the levels of, say, testosterone in my body. I didn't like wake up, check my levels this morning and say, okay, well, I have this level of testosterone in my body, so I better wear a sweater, right? That's not really how gender expression works. So we don't want to try to figure out somebody's biological sex by the way that they look. The other thing to keep in mind that's added complexity when it comes to gender expression is that people of the exact same gender identity can express their gender completely differently. So I will give an example. Let's take two cisgender women. So again, a cisgender woman is a person that was assigned female at birth and grew up to identify as a woman into adulthood. So let's say the first cisgender woman, she's got long hair, she's not wearing any makeup, and she's wearing a pantsuit and high heels. And then the woman standing next to her has a shaved head, no makeup on, and is wearing like a dress and like combat boots, right? So she's got makeup on, she's got a shaved head. They're both expressing their gender super differently, right? One's got makeup on, one doesn't. One's got long hair, one's got no hair. One's got a dress on, one's got a suit on, right? But they're both women, we know that. So if we follow the woman with the shaved head on her way through her morning routine tomorrow morning, let's say she's one of those people that goes to the gym super duper duper early. You know, on this particular day, she decides it's too early to go to the, you know, to wear makeup before the gym, right? She's just like, I'm just going to go to the gym without makeup on. And she decides on this particular day to wear her favorite pair of baggy gray sweats. When she arrives at the gym, you know, she goes through her workout, and on her way home, she decides to pick up a coffee. When she walks into the coffee shop, a barista takes a look at her, sees that she's got a shaved head, no makeup on, and is wearing baggy gray sweats, makes a series of assumptions about her based on that, and says, "Oh, good morning, sir. What can I get for you?" So one of the things that I want to point out here is that this is what we refer to as misgendering. Misgendering is when we use the wrong gendered language to refer to a person, i.e. using sir to greet a woman. The second piece of the equation is that this doesn't make her any less of a woman, right? It just means that somebody misinterpreted who she might be based on how she looked. And this brings me to the third point, and this is one of the most important points to keep in mind when you're working with clients and when you meet people out and about, and that is to try not to assume someone's gender identity based on how they look. This one is really, really hard, I have to admit, but it's really important because when we make that assumption, if we accidentally misgender a person, they might not feel comfortable coming to us for care, and there might be a lack of trust from the get-go. though, right? So it's really important to not make those assumptions when you first meet someone. Now, the other thing about gender expression is that it's very culturally sensitive. So the way that we express gender in the United States in 2022 is very different than the way that folks express gender in Northwest India in 2022. So there's a lot of really good examples of that as well. So I wanted to touch a little bit about the transgender umbrella. I probably get the most questions about this, so I wanted to spend a moment. The trans umbrella encompasses anybody that doesn't identify with the sex that they were assigned at birth, or anyone that crosses over or challenges their society's expectations surrounding gender. Very broad category, right? So let's break it down a little bit. Under the transgender umbrella are two main, general categories of trans individuals. Now, for some of you, this might feel really broad, and for some of you, this might feel really overwhelming. So, recognizing that this can be kind of a big slide, we can kind of meet in the middle there. But the first general way that somebody might be transgender is binary transgender people. So binary transgender people are people that fit within the gender binary that I just mentioned, right? The idea that you're either a man or a woman, they identify as men or women, right? So trans women are women and trans men are men. The question I get most often surrounding this is, okay, if somebody is a transgender woman, does that mean they transitioned from being a woman or to being a woman? That's a great question, and the answer is that the great thing about this term is that the identity of the person is in the label itself. So you know that a transgender woman is a woman because the word woman is in her identity, right? So you don't have to do any backwards math, anything like that. All you need to know is how she identifies right now, right? So there's that, of course. But then on the other side of that, there are non-binary trans individuals. Non-binary trans individuals, simply put, are folks that don't identify as men or women. Sometimes when I talk about non-binary individuals, the feedback or response I get is, oh, what is this newfangled thing? I've never heard of this before. You all are just making up a new term every day, on and on and on. I hear a lot of that. But the problem with that perspective on non-binary people is that it's ahistorical in nature. Non-binary individuals have existed since humans have existed. Two-spirit non-binary individuals are an example of this. So two-spirit individuals are Native and Indigenous individuals that encompass characteristics of multiple genders sometimes, or maybe a third, fourth, or fifth gender, depending on the tribe. I don't want to paint with too broad of a brush here. But two-spirit individuals have existed on this land longer than most of us have been here, right? So it's really important to understand that non-binary individuals have existed for a long time. And in fact, there are many culturally specific non-binary gender identities throughout our globe and throughout our histories. A couple other non-binary gender identities that I'll talk through quickly. Agender folks are folks who do not have a strong sense of a gender identity. Genderqueer and gender fluid people are people whose gender identity and gender expression might shift and flow throughout the course of time. Polygender people identify with multiple genders at once, and demigender people identify with the characteristics of a binary gender, but they don't identify as that gender itself. So a demi-boy, for example, might identify with the characteristics of what it means to be a man, but they don't identify as a man themselves. So I just ran through a bunch of identities. This is just 6. There are dozens of others non-binary gender identities out there. So I don't want you to think that this is a comprehensive list or really get into the weeds on memorizing all of these terms. What is important to take home from this is that there are some trans people that identify as men, some that identify as women, and some that identify as neither. And the complexity there is that the folks that don't identify as men or women, there can be dozens of those gender identities. So just be open to learning new identities and be aware that there might be identities that you've never heard of before, and that doesn't make them any less or more valid, right? So when we work with trans individuals, some things to keep in mind is that trans folks can decide to transition at any age. So I work with folks ages 5 through 75 that are coming out as trans. There's no one right time. The other thing about trans individuals is that they may not may or may not change their name or pronouns. So that's something to kind of keep in mind as well. But one of the big things is that a lot of trans people may or may not use hormones or surgery. I know a lot of trans people that don't use hormones or surgery at all because they simply don't want to. And many people that simply don't have access. So one of my areas of expertise in my work at One Iowa is LGBTQ healthcare. And here in the state of Iowa, it's very, very hard to access LGBTQ specific healthcare, specifically gender affirming care. There's very few providers that can prescribe hormone replacement therapy or provide or refer out to top and bottom surgery. In fact, there are some surgeries that aren't available in the state at all. So when we only think of somebody as being really trans if they've used hormones or surgery, we're missing out on a huge portion of the population that still needs care and still needs to be recognized for who they are, but don't have that access, right? Or simply don't want to use those things. When we work with trans individuals, though, you want to ask what their name is and use that name. I know there's going to be some discussion about this later on, but sometimes the trans person you work with won't have the same, like their correct name, the name that they go by might be different from their legal name. So it's really important to keep that in mind as well. That you might interact with somebody that there might be two names at play, and you'll want to think about that and be thoughtful about that. But of course, we also want to avoid invasive and unnecessary questions. So by this I mean you don't want to ask a trans person about their use of hormones or surgery unless it is relevant to the scope of your work that day. Admittedly, there are pieces of the legal system where you might need to know if somebody has used hormones or surgery, but most of the time that's not going to be the case. And if you're just asking out of curiosity, don't ask, because that's a really invasive question otherwise. So make sure that it's within the scope of your work if you have to ask. And I would also explain to the person why you're asking as well. So keep that in mind. Somebody asked a really great question in the chat. I want to get to it. If one identifies as heterosexual but falls in love with a transgender person who has transitioned from one sex to the opposite sex of the first party, does that affect the label the first person would use for themselves? Nope. So that person is going to identify in a way that feels most affirming to them. So that doesn't change their identity necessarily, regardless of who they date and if that person is transgender or not. So really good question. That shouldn't change that person's sexual orientation unless they decide to self-identify a different way, in which case you would want to take their lead and use that language appropriately. So yes, thank you so much for that question as well. So yeah, thanks so much for asking that. And then of course, I like to talk a little bit about intersex folks. Folks who are intersex are folks whose biological anatomy and or genes vary from the expected male or female hormones, chromosomes, internal and external reproductive anatomy. This makes up about 2% of the population, which is similar to the percent that has red hair. So you've probably met an intersex person and didn't realize it. Intersex folks are interesting because they may or may not identify as LGBTQ, but they often do. But of course, when we talk about biological sex, it's not terribly binary. So a lot of people think, well, you're either male or you're female. That is what's natural. That's not actually the truth. There are people like intersex people who, aren't either, right? They're not in one box or another, but rather we all fit on a spectrum of maleness and femaleness, and we move along that spectrum throughout the course of our life. In fact, our hormones shift and change when we age, when we go through puberty, when we give birth. There's all sorts of parts of biological sex that shift quite a bit. So that's something to keep in mind as well. If you're one of those people that keeps thinking, well, you're either this or that, and that's what's like in nature. Actually, nature is pretty complex when it comes to biological sex as well. Now, as I wrap up my little portion for today, I wanted to mention it's not always obvious who's LGBTQ, so don't just treat people in an inclusive way if you think they're LGBTQ, but rather treat people, consistently across the board in a way that is inclusive. It's not okay to ask invasive questions about people's bodies or transitions unless it's relevant to the scope of your work, or to out them against their will. So if you are working with an LGBTQ client and they share that they're LGBTQ, don't share that with other folks unless you have explicit permission from them to do so. And keep in mind that there are no universals. So some LGBTQ people don't even like the term LGBTQ. We don't want to paint with too broad of a brush here at all. So that's something to keep in mind as well. But finally, I wanted to make mention of a couple of best practices. Two of these I've already talked about. So mirroring language is really, really helpful and vital. It's something that's going to make your work with that person more inclusive. And you want to avoid making assumptions. The other thing you can do is you can ask people for their pronouns and give your own pronouns as well. This can create a safe space for folks to feel like they can share who they are, and it also ensures that you know how to use language that is affirming to them. You can use and practice gender neutral language, which is a way to, use language that is more gender neutral, so you're not assuming the gender of the person you're talking about. This is a great way to kind of zoom out your language so you're being as inclusive as possible. And finally, prepare to apologize. You're going to goof up. That is totally okay. Even a quick apology can make a huge impact. So I wanted to make sure to mention that as well. And of course, when we are talking in the next kind of section, some terms that are helpful to know is misgendering, like I said before, is that using the wrong gendered language to refer to a person, i.e. using sir to greet a woman. And dead naming is when we use someone's legal or given name instead of their correct name post-transition. This is something we want to try to avoid. So if someone's legal name is different than the name that they go by, when we're talking to that person, we want to make sure to use the name that they go by, right? Even if it's different than what is written down. The other piece of this is that misgendering and dead naming can also often cause dysphoria, which is a distress state arising from a conflict between a person's gender identity and the sex that they were assigned of having as birth. Dysphoria can be really negative and really harmful, especially to trans and non-binary people, although not all trans and non-binary people experience it. So when we try to avoid misgendering and dead naming, we are avoiding creating a space or an atmosphere where dysphoria can happen in our work with somebody. So that's also something important to keep in mind as well. Just understanding pronouns and how to use them is also going to be a vital piece of the puzzle as well. And you don't need to get why somebody uses their pronouns to use them and refer to them respectfully. So a pronoun is a word that's used in a sentence to refer to a person without using their name. In this situation, June uses she and her pronouns. If I were to use that in a sentence, I would say June goes to the store to buy her groceries. She stops by the mall to pick up her favorite nail polish. That nail polish is now hers. Most people are often familiar with using she, her, or he, him pronouns. However, it's often ideal to use singular they and them. So in case you're not familiar, singular they and them is a gender neutral pronoun that you can use. The CLE code word, it's a surprise, hello. The CLE code word is ally, A-L-L-Y. So I thought I would just make mention of that as we move through the presentation as well. Yes, please pop the CLA code word in the Q&A box on the right side of the screen. And if you don't have a license in New Jersey, New York, Kansas, or Pennsylvania, you can disregard that. Singular they and them has two main uses. It's both very practical and it's often a gender neutral pronoun. So you probably use singular they and them all of the time without even thinking about it. So let's say you see a wallet on a table at a restaurant. What you would probably say is, oh no, somebody left their wallet at their table. Somebody should turn it in for them. What you probably wouldn't say is, oh no, somebody left his or her wallet at his or her table. Somebody should turn it in for him or her, right? That isn't the way most people talk typically, right? So you probably use singular they and them all the time, but some folks get a little bit nervous about it grammatically. So, I'm here to put your mind at ease. Luckily, the Merriam-Webster dictionary has recognized singular they and them as an appropriate singular pronoun. Additionally, it's part of the AP Style Guide, the APA Citation Guide. A lot of the bastions of the English language recognize singular they and them. So it's something to kind of keep in mind as well. The other time that you would want to use singular singular they and them pronouns is when someone's correct pronoun, right? So in the, one of my very, very good friends uses they and them pronouns. So the only way to respectfully refer to that person is to use they and them. So you might interact with a client that uses they them pronouns as well. So they, them, and theirs is the gender neutral pronoun you're most going to interact with, but there are other gender neutral pronouns called neo-pronouns that you might also interact with. There are dozens of neo-pronouns. Z, zir, and zirs is an example of a neo-pronoun as well. You may or may not ever interact with somebody that uses a neo-pronoun, but I thought I would mention it. And if you interact with somebody that uses a neo-pronoun, you can always just Google it and you will find the way to use it online. It's pretty easy. So you can share your pronouns anywhere that your name is, including things like email introductions and first interactions. So when you first meet a client, you can always share your name and pronouns and ask what their name and pronouns are as well. Some other things to keep in mind, gender neutral language can be really helpful. I have some examples up on the screen, but if you are interested in learning more about some examples of gender neutral language, I'd be happy to send more. So some examples are like parent and caregiver. You can refer to somebody by their vocation, like, oh, I talked to the maintenance person this morning, partner, significant other, or spouse, things like that. Those are all tools in your tool belt to not assume somebody's gender identity and to use more general language. And finally, look at these cute little dogs. I wanted to give you an example of how to practice this because I know that when I first learned about gender neutral language and they them pronouns, I felt really overwhelmed. So I did this when I read a book before bed or when I was scrolling on my phone during my lunch break. You can take whatever you're reading at the time and change whatever it is to practice the thing you want to practice. So an example of this, let's say I wanted to practice they them pronouns. In the first sentence, I would say Max wants to go to the dog park with their dog Andy because they love to play with other dogs. This is a really, really useful practice to get into, and it's truly how I learned, back before I even knew I was a trans person, it's how I learned that they and them pronouns could be integrated into my everyday language. I just created a safe space for myself to mess up if I made a mistake. This was really, really helpful. So you can do this anytime that you're reading something, just change the things in the paragraph to be what you want to practice. And finally, before I turn it on over, you're gonna goof up. That's okay. I believe in a quick, concise apology, but keep it authentic. I believe that a great apology should take you less than 10 seconds. My recommendation when it comes to an apology is try not to be overly apologetic or explain why you misgendered someone. Try not to blame the person, panic, or dwell on the mistake. Often when I see this stuff happen, it's because somebody feels really bad that they misgendered or dead named someone and they don't want to feel really bad anymore. It's taking the focus away from the person that you've harmed and putting it on yourself. So when we apologize, keep it short, sweet, and concise, right? So you can do it within the flow of a conversation. So let's say, I'm chatting with my friend and said, oh yeah, Courtney, he and I, I meant she and I, right? So a quick little sorry like that can work. Or you can always say, oh my goodness, I just realized I misgendered you. I'm going to make sure I don't do that again. I apologize, right? So it can be really short and sweet, but make sure you do address it in some way, shape, or form and don't just paper over it. All right, I'm going to finally turn it on over to our experts. Thank you all, and please let me know if you have any questions as well. I'd love to hear from you in the future, but I will pass it on over.
Thank you so much, Max. I appreciate your expertise so much. And I'm Brianna Young, Denton Davis Brown. This is Tyler Coe, Denton Davis Brown as well. And I've had a chance to co-present with Max on many opportunities, and every time I learn something new. And I just think it's so valuable. We're all attorneys, and we're going to get into the legal aspect of things, but it's so valuable to understand what we're talking about and understand the definitions and the terminology and the sort of personal issues as that really important foundation for the legal aspect. So thank you. And I appreciate that, Max. As any questions come up, please do drop questions in the chat. We love questions. And like Max said, you know, we're all here to learn, and we love getting questions. So so with that, Max, can you advance to the next slide for me? So as a general counsel, you know, you are working with a lot of people who come to you with just a lot of different issues that they're asking about, questions that they're facing, and so I thought it would be helpful to spend just a little bit of time talking about some of the issues that LGBTQ individuals are dealing with in the law, and just so we can all have a general understanding of that. So as a sort of precursor to all of this, I would just say, you know, state law is really, really, really important. There are certain federal protections in place for LGBTQ individuals, not very many, but Obergefell, the Supreme Court ruling, which we'll talk about in a little bit, legalized same-sex marriage. So that's an example of a federal protection. But many of the protections afforded to LGBTQ individuals come from state law, which varies widely from state to state, as you can imagine. So in Iowa, for example, we have the Iowa Civil Rights Act, and that act protects a host of characteristics from discrimination in public accommodations and other places. And two of those characteristics are gender identity and sexual orientation. And there was a push at the State House last year, and it's expected to be another one this year to remove gender identity from the Iowa Civil Rights Act. But at least for the time being, gender identity is a protected class. So that would entail transgender individuals, non-binary individuals, and others who Max talked about. One really common Iowa Civil Rights Act question that we receive as general counsel has to do with bathrooms. Bathrooms are in the news, bathrooms are an issue. A lot of people are talking about bathrooms and transgender people using bathrooms. State law always governs. In Iowa, like I said, you know, the state law protects transgender individuals, and part of that protection is entitling them to use the restroom that corresponds with their gender identity. So if the person is a transgender woman, they need to be able to use the women's restroom because they are a woman, and so on. So that's a common issue that we see. And some of these state laws, like the Iowa Civil Rights Act, apply not only to the workplace but also to, you know, any public accommodations, with few exceptions. So restaurants, movie theaters, just all kinds of places. So there's that broader context too. So my practice is primarily in the areas of wills, trust, and estate planning. And one important consideration for LGBTQ individuals in doing their estate planning is the power of attorney. And there are two types of powers of attorney. There is the general or financial power of attorney, and then there's the medical power of attorney. Both documents are a document that gives another person the power to make decisions on the principal's behalf. So if I sign a power of attorney saying Tyler can make my medical decisions or my financial decisions, I am the principal and he is my agent. These documents are really important for everybody. Many states have resources where you can find powers of attorney for free online. I know Iowa AARP, for example, has the medical power of attorney forms available online at no cost. They're so important for everybody, and I would say especially for LGBTQ individuals. Because without a power of attorney, the hospital or other medical provider is going to follow state law in determining who gets to choose, who gets to make medical decisions for a person who's too ill to make decisions for themselves. And that's typically going to be the closest biological family members, but those are not always the individuals who we would want making decisions for us. Unfortunately, not every LGBTQ person has family members who are supportive and affirming to them. So it's a good idea to sign a power of attorney so that the client can choose who they want to be their decision maker, and they know that it's going to be somebody who will respect them. And along those same lines, in Iowa, and we have something called a Declaration of Designee for Final Disposition. And I know that a lot of other states have something similar. It might be called something different and hopefully a little catchier. But in Iowa, this declaration is a document that I can sign where I get to choose who my funeral decision maker will be after I die. And this is a really, really, really big one, especially for trans and non-binary people. Again, as is the case with medical decisions, if I die and I don't have one of these declarations, the state law governs who the person who makes decisions about my funeral and burial will be, and that's not always going to be the person who I want. And the reason this can be really important for especially trans and non-binary people is that some individuals have families who don't respect their gender identity and will make funeral arrangements where the person is not respected in that. So an example would be, a transgender woman who was assigned male at birth has a non-supportive family, and the family members decide that they're going to use the person's dead name, and they're going to dress the person like a man at the funeral. So none of that is good. So this Declaration of Designee for Final Disposition is really valuable and really important. Another issue that is important for LGBTQ individuals can be confirmatory adoptions. So an example of a confirmatory or second parent adoption would be where there are two women who are married to each other, and during their marriage, one of them carries and gives birth to a baby. And the baby is born during their marriage, and both women are on the birth certificate. At least they are here in Iowa, where state law requires such. So we've got a baby, and both mothers are on the birth certificate. In a confirmatory adoption or a second parent adoption, the parent who did not carry the baby or give birth to the baby will legally adopt the baby in a court. And the reason for that is just to shore up the legal protections that parent has, that sort of non-biological parent has. The birth certificate is an important administrative document, and it does carry certain weight in a lot of states, but it's not a legal determination of parentage. And there have been some states where failure to do this type of confirmatory adoption has ended with really bad results. So, for example, courts in Idaho and Oklahoma have declined to rule that the non-biological or non-gestational mother was legally entitled to parentage rights, even though she was married to the other parent when the child was born, and even though the couple jointly selected the sperm donor and entered into a sperm donation contract, and they were both named on the birth certificate as parents and raised the child up together until they got a divorce. So even in situations like that, without a confirmatory adoption, you're really at risk of having your parent-child relationship severed. So unfortunately, it's unfortunate that somebody would need to adopt their own child, but it does provide a lot of really valuable protections. And then the other thing I would mention would be, wills and trusts are very, very important. Again, without a will or a trust, state law defaults to intestacy for any non-beneficiary or non-joint assets, and the heirs at law under your state law might not be the individuals who you would want to leave your assets to. So it's really important to to create a will and create a trust, I always like to include additional language in my wills and trusts for LGBTQ individuals. Under Iowa law, and I think it's the same in a lot of states, when you get divorced, any provisions in favor of your ex that are in your will are automatically revoked. And my concern is that post Dobbs, there might be certain rulings or administrative decisions or statutes or whatever that chip away in some manner at the right to same-sex marriage. And what I don't want to have happen is for somebody to move to another state and have fewer legal protections, and that state to decide that they're not married. And by the way, any provisions in your will in favor of your spouse are treated the same as if you were divorced. We don't want that, right? So it's a good idea to include language in the will or trust that says that these bequests in favor of my spouse, this nomination of my spouse as executor or as trustee are going to survive any state laws that might remove the right to marriage equality. So anyway, I know that's a lot of information, but I think it's just good to know there are special legal considerations that do impact only LGBTQ individuals, or especially LGBTQ individuals. I think that it's really easy as attorneys to fall into the trap of, well, gosh, there's marriage equality under the Supreme Court's ruling in Obergefell, so I'm just going to treat my same-sex or trans or gay or whatever clients the same as a straight person or a cisgender person. But there really are really important additional legal considerations to think about. So when you're representing your companies, you know, these are good things to know. You know, really when to reach out for other resources. So Tyler's going to talk about some practical tips for being more inclusive. Max, if you could advance 1 or 2 slides.
There we go. Thank you. So what we're going to talk about, here's an overview. I'll let you look at that slide for a second. And I'm going to tell you before we advance to the next slide, I like to take the approach that it's the right thing to make sure we are inclusive, we are diverse, that we're equitable, just because it's right. But there's also another way that appeals to a lot of people, and that is through how can we be diverse, equitable, and inclusive through advancing economic interests. So we'll move to the next slide, please. So assume some of those you work with are LGBTQ+, right? 2021 Gallup poll says 7.1% of Americans identify as LGBTQ+. That is an increase from 5.6% in 2020. So look at that change year over year. Here is a number that surprised even me when I was preparing for this presentation, but I think it shows that society is moving in the right direction of acceptance, equality, etc. 21% of Gen Z adults in America identify as LGBTQ+. So these individuals are in your workforce. They are also consumers of your information and products. And let's talk about the National Gay and Lesbian Chamber of Commerce. The combined buying power of LGBT community was $917 billion in 2015. To me, that's a lot of money. 2022, LGBTQ+ owned businesses, 1.4 million LGBTQ+ run companies in the US account for 1.7 trillion, that's trillion with a T, per year in revenue. It is a big, huge, potentially fatal mistake to not recognize what you as general counsel for both your company, your employees, and your consumers can do, and how there is a definite economic benefit for doing the right thing. And so let's talk about, on the next slide, education and resources. 2 more over will go, I think. There we go. So here's what we need to do. How do we accomplish our goals here? Well, share resources and education opportunities for your boards of directors, your managing members or partners. Start with some of the basics. The basics, listen, we get it. A lot of times we don't come with this knowledge preformed in our minds, right? So that's why we have experts like Max. They provided us with knowledge today so we can have a better understanding of the community. The other thing is affinity groups. What I find really important when I talk with general counsel, business owners of all sizes, have affinity groups. Get employee engagement at every level. Make sure that you're exploring all levels of the business. Make sure that everyone knows and feels included, because from the person in the mailroom to the CEO, everyone needs to make sure they are part of what's going on. And then finally, share resources. Like I said, use specific documents, create them, have them created for your company. I will tell you when, and we'll talk more about this on the next slide, but when people notice that things are custom made, they pay attention. So let's look at reviewing the use of gendered language, right? So how does your department use gendered language? Try not to do this. It takes work. As Max spoke about earlier, they said, you know what, we all make mistakes. And it's true, I do. I don't know about you, but it happens with me. I just need to acknowledge it, apologize, be sincere, and move forward. Make sure that not only internally, but externally, you are using the appropriate language and terminologies. Just again, not just for employees, not for the board, not for the execs, but for customers, end users, clients. That's really important. That's something we do here at Denton's and in my family law practice, my divorce practice, and Brianna's trust and estate practice. We make sure we get that information, willingly of course, from our clients. We want to know, so we're respectful. You have the power as general counsel to effectuate change. You have the real power here. Yes, you are required to do what the board of directors wants, but you really have more power than you may know. So let's talking about mirroring the other person's language. Max spoke about this some. Start simple. I like to say, hey, my name's Tyler Coe, he, him, his. How's your day going? Nice to meet you. Shake their hand. And then Brianna would introduce herself and do the same thing. I often let the other person take the lead, let the person you're interacting with be the one to show you how comfortable they are. Ask open-ended questions. Don't say, and we'll get into this, husband, wife. I just got asked a few weeks ago, I was at a pumpkin patch with my dog, and someone said, oh, did you bring your wife with you? No, unfortunately for me, I said, unfortunately, she couldn't make it. Well, I identify as a gay man. I would never have a wife. So make sure you're not inquiring as to sex or gender. Just a few parts about respect, confidentiality, and then I have a few more things to say. I know we're brushing up against time. Make sure you keep documents regarding gender identity and sexual orientation private. Don't put them on a shared server, shared file cabinets, etc. The important part is ensure human resources have the appropriate training, right? They're the holders of so much information. And if an employee tells you their identity and or orientation, don't share with others unless unprompted, they ask you to do so. And that's a whole other conversation we won't cover today. So I love making the business case for inclusion. And here's the deal. We need to signal. Start with recruiting. Be inclusive. Watch the language you're using. Have visuals on websites. Have options other than male, female, and job applications. These matter. I will tell you that companies of all sizes pay attention, employees pay attention, consumers pay attention. You know, don't ask someone, and I covered this already, about their wife or their husband, you know, and if something happens, jump in. That's what I like to do. I don't like to let things linger. I like to just jump right in. So lastly, intersectionality. Be aware that diversity, equity, inclusion are not separate boxes. They all intersect. They all matter. They all must come together. They complement each other. Make sure you consider all backgrounds and all humans. Like I said, we're not checking a box. Those days are gone. That no longer works, and it didn't work. And then remember, people do not identify based on one characteristic. We're taking a holistic approach. Just like with our law firm Denton's, we take a holistic approach for not only providing legal advice, but services and knowledge. And so one thing that unites us all, or at least most of us, is we can do this, like I said before, from an ethical or moral approach, but also to build within your company as a general counsel, you can also make an economic approach based on what I've talked about today to why this is so important. I really appreciate it.
Thank you, everyone. And if you have any questions, don't hesitate to reach out to me or Tyler or Max. Our information's up on the screen. So thank you so much.
Thank you.
Thank you to our presenters, and thank you to everyone for attending today. In approximately 15 to 20 business days, you will receive an email with a link to your CLE certificate. Your webinar login details will be used to process these certificates. No additional steps are required. As a reminder, the code word requirement is only if you are seeking credit in New York, New Jersey, Pennsylvania, or Kansas. Thank you again for attending. See you next time.